to the Let's Talk Crypto podcast, where we discuss the latest Bitcoin, blockchain, and digital asset news.
Hi everybody, hope you're all well. Thought we'd try something different for this Friday, which may become a permanent feature. Basically, we want to keep it under 10 minutes, just a market wrap-up, anything that's interesting that we've seen in the news, whether it be related to price, innovation, new tech, adoption, or events. We realize that not everybody's got 45 minutes to an hour to listen to a whole podcast, as well as not everybody's got the time to follow the latest news and happenings within the crypto space, which is why we thought this might be a handy feature for everybody who's missed the week to have a quick catch up. With that said, I hope you enjoyed. I hope you found it informative. Let us know. Give us some feedback in the comments column. Give us a like, give us a share. Let's get going. People are very excited and there's a lot of over exuberance in the air. I must admit it's quite contagious. I'm not immune to these things, that's for sure, and I don't mean that in a condescending way, but it certainly is contagious when you see the Bitcoin price rocketing up double percentage points in a single day and sometimes even within a single hourly candle. Equally though, we saw a very big pullback today. In fact, within a 30-minute candle, I saw a $1,600 dump. You can only imagine how many people got liquidated on a move like that. However, a very encouraging sign is that within minutes it was bought up from $6,200 all the way back up to $7,000, and now we find ourselves back over $7,300. In the previous 18 months during the bear market, that probably would have led to further continuation, and although it is still likely that it could happen, it definitely is a sign of the times changing when it is bought back up. So instead of people selling the rises, they are now buying the dips. And we all remember how that goes. For those of you that were around in 2017, you'll remember that every pullback was met with a fierce and swift buyback, which leads to the saying, buy the dip, buy the dip. Couldn't really go wrong in 2017. You just bought the dip and you rode it on up. Fast forward to 2018, and it wasn't so easy anymore. You had to know when to buy the dip. And equally so, you had to know when to sell the rise, as we yo-yoed up and down, oscillating between about 10,000 and 6,000 for just about the majority of 2018 before breaking the 6K barrier approximately 12th to the 14th of November 2018. From that moment, I would say it was lopsided in favor of just selling the rises until we sort of found a local bottom around about $3,200. That has remained our base support since about 17th of December 2018. And since then, we have been in an upward trajectory to $8,400, which brings us to 5 months since we were at 3,200. That is quite a long time. And what's interesting is that anybody who's only just entered the Bitcoin market in the last 5 months is likely up on their original entry price. Are we building a whole new round of hodlers who see the value, who want to be able to control their future, their finances, and have personal sovereignty? Another question, will we be revisiting the lows? I think it really depends on how strong the new hodlers are and how easily shaken they are if we have a really substantial pullback. Nevertheless, we'll leave the technical and fundamental analysis for another time. What I'd like to do now is have a look at some of the news that has taken place in the last week. As you may well be aware, we are in the week of consensus, and that usually leads to a lot of news articles, a lot of optimism, a lot of new features and releases are actually held back for this specific week to have the maximum impact in terms of marketing. One such announcement that really jumped out at me is the announcement by Blockstream. Blockstream are the creators of Liquid Network, and they do have a few Bitcoin core developers on their team. They're a highly qualified group of individuals led by Dr. Adam Back. And they originally released Liquid to alleviate the pressure on the Bitcoin blockchain, so exchanges could transfer value between each other without inundating the actual main chain. This announcement appears to be that you'll be able to load your own tokens now on the Liquid network. At first glance, it seems similar to what Ethereum did with ICOs being launched by companies as a method of crowdfunding their project or getting their ideas off the launchpad. The official press release that Blockstream released includes launch partners, Basically, they say that they're initially launching with a limited set of partners who are pioneering many new tokenized securities use cases on Liquid. Some are recognizable, some are new, perhaps to the layman. One of the more familiar ones is Bank to the Future, which was started by Simon Dixon. To date, they've been a highly successful online investment platform. Apparently, they're planning on issuing tokenized securities on the Liquid platform. And other mentions are TokenSoft, which apparently is a multi-blockchain issuance platform, which will have an API or Liquid-based issuance tools for its users. Another one is Atomic Capital, the issuance and fundraising platform. Zenus Bank, apparently an innovative new American bank that allows individuals and companies worldwide to open accounts remotely, and Pixelmatic, a fast-growing game studio led by Samson Mao. We all know who Samson is. Apparently that will be launching soon on Liquid. Their latest game, Infinite Fleet, will also feature an in-game Liquid-based utility token to power its economy. Exciting. For those of you that don't have any smart contracting programming capabilities, you'll be glad to hear that it comes with a Liquid Securities control panel, which allows the issuers to adapt the contract, the issuance, the supply, and many other features. I suspect this is going to open the door to mass adoption of tokenizing assets. Another very interesting story doing the rounds is that HTC has announced it's going to be releasing a low-cost version of its blockchain phone, the Exodus 1S. Apparently, the device will be capable of running a full Bitcoin node, means that the customers will be able to store the entire blockchain's data on their device. It goes without saying that this is huge. Running a full node enables you to verify transactions yourself on the blockchain and not have to rely on third-party APIs or other people's nodes to verify for you. So just maybe the Bitcoin Core developers' massive push to try and keep the block size limit at a reasonable level is going to pay us some dividends. Quoting Phil Chen from HTC here, the Bitcoin blockchain is about 200 gigabytes and it's growing about 60 gigs per year, and those numbers are reasonable to hold on a smartphone. Imagine the iPod with 256 gigs. Of course, the music fan wants to keep the whole music library, but the crypto fan wants to keep the whole Bitcoin blockchain. End quote. I can definitely imagine that in not too distant future, we'll all be running full Bitcoin nodes on our phones and running Lightning Network nodes. I'm sure I don't only speak for myself to say this is really exciting. It just goes to show how much development and how much fundamental improvements have been taking place behind the scenes during this raging bear market. I wanted to try and keep this podcast very short and brief for a Friday and wanted to keep it mainly positive. However, I couldn't avoid this last piece that I'd like to add, and that is that the New York Supreme Court has ordered Tether to freeze transfers to Bitfinex. Specifically, according to the CoinDesk article, the judge ordered that Tether cannot loan any assets to Bitfinex or other parties except in the normal course of conducting its business. Tether cannot distribute any funds from its reserves to executives, employees, or other individuals except for payroll and normal contractor, consultant, or vendor payments. Neither Bitfinex nor Tether are allowed to modify in any way documents asked for by the New York Attorney General's original subpoenas, and the injunction will expire in 90 days, but the New York Attorney General's office can petition the court to extend it 2 weeks before then. What to make of that? Well, definitely where there's smoke, there's fire. We just don't know how big the fire is yet. This doesn't look like it's going to end well for Tether nor Bitfinex, and it will be very interesting to keep an eye on it and see how it affects the market. For those of you who haven't heard how this all started, it comes just weeks after the New York Attorney General secured a preliminary injunction freezing Tether's assets and asking for documents about a $625 million loan and a $900 million line of credit it offered to Bitfinex. Bitfinex needed the funds to continue operating and processing customer withdrawals after losing access to some $850 million that were being held by Crypto Capital, a payment processor. And funny enough, Crypto Capital's operators were indicted last year by the Department of Justice for illicit banking services to crypto companies. Bitfinex is a large stakeholder in the crypto space. You can bet your bottom dollar that the crypto community will be watching this space very, very carefully. Well, that brings us to the end of this Friday's podcast. Happy Friday. Get out there, have some fun, stop looking at the price, enjoy your family and friends, and we'll catch up next week.